Investment markets made very strong gains since the start of the year. The correlation between asset classes was unusually high, as both equities, bonds, commodities and credit all made solid gains. Equity markets achieved double-digit gains in the first quarter, and regions and sectors that underperformed in the last half of 2012 outperformed since the start of the year. In bond markets, the peripheral countries made the strongest gains, while AAA government bond yields were volatile, particularly in March, but finished the quarter close to year-end levels. Global central banks have been providing more liquidity to the global economy, which has started to find its way into financial markets. For example, the ECB has lent over €1 trillion to the banking system. The Bank of England and the Bank of Japan are both printing money and purchasing government bonds in the market. The People's Bank of China has allowed banks to hold less money, which is driving more money into the economy, and the Federal Reserve is also trying to keep longer dated yields lower. Furthermore, the actions by policymakers in Europe have removed some of the tail risks that were evident, particularly in November of last year. For example, there was concerns that a bank might fail, or a government such as Italy or Spain would have difficulty funding itself in 2012, or even worse, that the euro may break up. Since the start of the year, or December of last year, we have seen that there has been very strong policy actions to remove any of these risks from markets. Over the past few weeks, the momentum in equity markets has slowed. The economic data, particularly in China and Europe, and to some extent in the US, has started to disappoint expectations. It is likely that there are further risks that could implode during the rest of the year. However, for now, markets are facing the increase in global liquidity, which drove markets in 2009 and may drive markets over the coming quarter. As well, valuations are also cheap. However, we have to bear in mind that we are in an unusual, risky time.